When the market is crashing like this, it can be very difficult to remain calm and keep your sanity. But that's why in the world of option selling, the number one factor is the asset, right? I've had this conversation with many people, and you got to think about it like this. Writing options, or better yet, underwriting options, is the same term as underwriting insurance for a reason, because you're underwriting. What are you underwriting? You're underwriting the overlying asset. So if you're selling options and you're selling options on things that are making you freak out when the market is crashing, then it's really your fault, not the market's, because in the end of the day, the market is always going to have corrections. It's going to go through phases, right? When we look at the market as a whole, you can see that over the long term, the market really does always go up. Even if, the rest of this year involves the market crashing, you have to understand that it's only your fault if you're involved in assets that have you panicking and stressing, or if you're the one that's over leveraged, right? The market did not tell you to invest more money than you can afford. The market did not tell you to take out loans and start trading. The market is just the market, right? It's like the ocean. It goes in waves and you have to just learn to ride with it. Don't ride against it. And ultimately, if you aren't ready to get in, then stay in the sand, right? Play in the sand with the kids. And listen, I love laying in the sand myself, but ultimately I love being in the action. Now, am I going to sit here and tell you the market's going to do this? No. But at the end of the day, this account is definitely a leveraged account, right? When you look at my positions and where you look where I'm at, I'm all TQQ, IBIT, UPRO. I'm crazy, right? I'm not going to sit here and say that the stuff I do is for everyone, but I've come from a world of high risk. And ultimately, I'm prepared to take on whatever is going to happen. Now, obviously, it's crashing right now. Obviously, I'm in these leaps. I opened up, I doubled down on this leap just yesterday, right? Because at the end of the day, I got in up here. Now, I'm not here to time the market. That's why I purchased this leap for 2 years out. And the way I look at it is if I liked it up here, I better like it down here as well. And ultimately, that's going to be my strategy, is to continue reinvesting covered call income into more leaps and more shares, because what else is there to do, right? I'm not going to start flip-flopping and shorting the market now. I'm not going to start selling now. So ultimately, as an option underwriter, the only thing to do is continue underwriting, right? Sell more puts, sell more calls, buy more leaps, because in the end of the day, I'm believing in the market. I'm believing in the Nasdaq. I'm believing in Bitcoin. Even if it does do this, we know it's going to eventually do this. And we know, when you zoom out as much as you possibly can, this is a market that's only going to go up, right? When you look at Bitcoin or IBIT, it's like these are healthy charts in the end of the day. Even if they had to fill a gap, like, this gap has already been filled. Now, I wouldn't be surprised if this low gets taken out too. I wouldn't be surprised about anything, right? It could do this, but it could also, end up doing this and coming back up. In the end of the day, there's no way to know. Now, one thing I do know is that the market does consolidate at times. Ultimately, the reason why I like trading NASDAQ, UPRO, TQQQ, these things is because when you look at these charts, the chart of the overall market, this market will, or better yet, this chart will be the least consolidating chart you will see. When you go and start trading individual stocks, the problem is you don't know if something like this is going to happen, right? I can assure you that when Robinhood looked like this, the S&P 500 and the NASDAQ did not. Ready? Remember the time frame, February to March of 2024, right? And look at February to March of 2024. So, you get the point, right? When you're investing in the actual market, at least that when it's going down, it will go back up, which is why if I'm going to purchase leaps, it's going to be on something like UPRO and TQQQ. Now, obviously, IBIT is another candidate because, we love Bitcoin. But with that being said, even IBIT, right? Even Bitcoin goes into these long bear markets where it just never can pull out, right? Like something like this, this is obviously positive movement. This in the sense of like, if you bought leaps on this turn, right? Yes, obviously here you'd be profitable, but then you're dealing with this again. Now, when it comes to the stock market, it really does just go up and down. When it comes to the NASDAQ and the S&P 500, when you look at these charts, there's really not any consolidation. This is obviously the TQQQ chart, which is even more, volatile. But again, pulling up this NASDAQ chart, it's like it's either going up or it's going down. So it does make selling covered calls even more tricky, right? Because eventually it will reverse and go up very fast, especially if we're talking about TQQQ and UPRO. And that's why if you're going to commit, you have to be willing to commit for a long time, right? Something like TQQQ has been around for a decade. It's not like it's some fly-by-night asset. UPRO is much newer, but still, to me, or actually the same time frame, so it's not even newer. And to me, again, this is a chart that there's volatility, but what do you expect when you're talking a 3x leverage version of the S&P, a 3x leverage version of the Nasdaq? To me, again, I'd rather have a 3x leverage Nasdaq or S&P play than 99% of the plays that I'm seeing. 99% of these penny stocks, these meme coins that people are getting. To me, I'd rather go in selling premiums, collecting premiums, and double downing into leaps, leaps that are years out. And so when it does recover, if my covered calls start getting attacked, then I at least can roll and roll and roll. Now, obviously, this second leap, I did not even open a covered call on because I opened the leap yesterday, and before I knew it, the market was crashing. I was like, you know what, I should probably wait for the market to bounce. Now, that's always the issue with covered calls. A lot of people like to wait for bounces, which I have no problem with, but then you're missing out on all of this, which you could have been protecting your downside, collecting premium. So, moral of the story, guys, the market's going to crash. The market's going to go into correction phase. And if you're the one panicking, that's your problem, not the market, right? If you're the one that's over leveraged, if you're the one that's in assets that you don't want to be in, if you're the one that's losing your shirt, then you need to look in the mirror, because in the end of the day, you don't get mad when the ocean starts having big waves or small waves, right? It's funny because people that surf understand the analogy, because there's low tide, which with trading is like low volume. And again, you're not getting mad at that. Maybe a surfer is, and a surfer doesn't give a rat's butt about the market. So you need to evaluate yourself. If you're the one panicking, understand that you're the one that made the mistake, and now use that to your advantage, right? That's what led me down this path, is because I knew I loved volatility. I knew I loved passive income. Something like TQQQ, UPRO, IBIT, like these are good, in my opinion, good plays, because I know that all of these things will recover, even if they do have some leverage decay, even if it doesn't fully recover. At least I'm not going to be sitting in that one individual stock that isn't moving while the entire market goes up. So hope you guys got a lot from this video. It was a rough Friday. I hope you're doing okay. Make sure to like, make sure to comment, make sure to subscribe. Let me know your thoughts in the comments. Let me know how you're holding up during this bear market, and I will see you in the next video.